Hi everyone, welcome back to part 3 and the final part of the UK crypto tax Q&A with one of the leading crypto accounting companies around in Myna, with their head of crypto tax, Jamie Nuttall, again answering some questions on UK crypto tax for us. And just a reminder that I've included an online inquiry form in the description to this video where you can contact Myna directly should you be looking for specific crypto tax advice based on your personal circumstances. And you just need to make sure you put my name and YouTube channel in the referral box in that online inquiry form, just so they know where you've come from. If you haven't already watched part 1 and part 2 of this Q&A series, I'll include a link to them here and in the description of this video, so you can check them out first. Please do like this video and subscribe to the channel so I'm able to continue to offer more content for you in future. Just a reminder that nothing contained here is financial or tax advice. And let's jump straight into the final part of the Q&A. Can we pivot a little bit? So if it's all right, we're going to talk about crypto lending, crypto loans, just a little bit.
Yeah, sure.
So the assumption, my assumption, but the assumption I think is that to get a loan in crypto, you're adding crypto as collateral, and then the platform, whichever crypto lending platform you decide to use, is then giving you, normally of your choice, but a crypto in return. The crypto that you put down as collateral could be anything, BTC or whatever it is.
Mm-hmm.
Do you then pay, because that's essentially like staking, so you're normally going to get a return on that collateral put down. Do you then pay income tax on that?
No, you do not. So it's a capital situation here, and we have to break it down to fully understand it. And hopefully, everything leading up to this moment has given anyone who's listening an idea of what's going on so far. So you're talking about putting down collateral for a loan. We need to, as we discussed, the taxable moment is when you dispose of the asset, okay? Or in other terms, when you lose beneficial ownership, okay? So the first thing is, I assume there's going to be smart contracts involved in most of these situations. Does the smart contract say that you lose beneficial ownership or not? It might say explicitly, it might not. So for example, the contracts might say you have no say on what you do with this until you do X, Y, and Z. That would allude to losing beneficial ownership, perhaps. Or it might say you can do whatever you want. We're just anchoring a loan for another asset which you will return or whatever it might be, which you may or may not. Now, it's very much like if I were to lend you my phone, for example, or my car or my motorbike, let's say, a far more exciting example. It's never yours. You're using it, but it's never yours. If you crash it or whatever it might be, then yes, we would have something in place legally to say that you would pay for it, If we're friends, we might not, but this is not a friendship kind of situation in terms of when you're loaning crypto. There's going to be some form of contract to say, if you mess up this asset that we're lending you, you're going to have to pay it back. And it sort of works both ways with this loan situation. So if it is a case that you lose beneficial ownership, you dispose of the assets, therefore you create a gain or a loss. That simple. And then you exchange it for some assets, which then in itself might create a gain or a loss, depending on what you do with it. You might put it into a business that creates income, so be it. But then it depends what you do sort of situation. There's no hard and fast rule. Now, if you go into this protocol, this contract, and it says you do not lose beneficial ownership for whatever reason, then nothing happens. There's no tax. You borrow the assets, you do what you want with it, you gain, you lost, whatever it is, that's a separate thing. You return it back and you get your assets back, then nothing happens. There's no gain or loss. So you are right when you say it's similar to staking, but it's not similar to staking like it's the staking rewards. It's nothing to do with the rewards, which would be miscellaneous income. You're absolutely correct. It's to do with whether you lose beneficial ownership or not of the assets going into the staking protocol, or in this situation, the loan protocol. So no, it's not miscellaneous income. It's not income tax. It is all capital gains tax. And if you get liquidated, it's at the point where you get liquidated that would be counted as a disposal if it says you don't lose beneficial ownership when going into it, for example. So hopefully that makes sense. It's very complicated.
Yeah, definitely. So it's essentially looking, as you said previously, looking at smart contracts or the terms and conditions for that particular platform to talk to see if beneficial ownership
It's lost.
is taking place. Yeah, and I know you're working with someone at the moment, aren't you? Looking at that in particular.
Yeah, it's very topical. I'll be highly surprised if we haven't got at least half a dozen clients looking at this at any given one moment. But yeah, we do have one specific client right now trying to figure out what's going on there because it's relevant to them. It's very difficult to figure this out because we have to draw a line as accountants what's legal work and what's not. And you might need to pay an independent legal advisor to look into that. Depends how much is going on. You might want to look into yourself. And again, not advice, but all I'm saying is I know some clients ask AI. They get the contract, the smart contract, put it into AI, and they say, "Do I lose beneficial ownership in this?" It's not. I'm not saying it will stand up in court necessarily. I'm not even saying do it, but it's better than guessing.
Yeah, that's very interesting. That it's probably capital gains tax
Yeah.
On that, because my assumption was essentially it was when you ended up paying off the loan. So when you yourself paid off that loan, then there might be a capital gain, as it were, from the crypto.
Yeah, there would be as well.
Yeah,
It would
as
be as
well.
Yeah, exactly. It depends. So if you get liquidated and you've already lost beneficial ownership when going into it, then nothing really happens. If you don't lose beneficial ownership, then you get liquidated or paying back the loan or whatever it might be, then at that point it would be a disposal. So again, it comes back down to the very basics, which we spoke about earlier on, the point at which you lose beneficial ownership, and it's the disposal of the asset, even when you're paying off the loan, even when you're going into the loan, even when you're giving it to a friend, family, whatever it might be. It's about when you lose beneficial ownership of the asset, i.e., dispose of the asset.
Never easy, is it, Jamie?
It's not,
Never
I'm
easy.
afraid. It's not.
But I think this kind of links because let's talk a little bit about airdrops,
Yeah.
because I think that does it kind of segues across to airdrops a little bit.
It's never a
Um,
segue, James, when people say segue.
no, it's not. But so crypto tax on airdrops, miscellaneous income tax, but not always.
Yeah, yeah. So believe it or not, this is probably the most common question I get because it's a nice combination and cross section of two different situations where you've got it's relevant to a lot of people. A lot of people would have got airdrops at some point, and also it's complicated when it comes to tax, but not crazy complicated. There's a nice cross section where it's almost the perfect point where it's a very popular question. It's also one where most people get wrong. So let me try and break this down as best as I can. Most people know that with airdrops, it is taxable. Okay, fine. Most people know that when you receive the airdrop, it is subject to miscellaneous income. Probably, not always. And that is what most people do not know. And when I say people, I'm talking about accountants as well, which is understandable. So, people have their specialism in accountants as accountants, so I get it. I don't know anything really about inheritance tax or acquisition and sales, so I don't provide that service. But you don't know what you don't know. So there's actually three options here when it comes to airdrops. The first one is it even an airdrop? So let me give you an example. Jupiter, okay, Jupiter airdrop fairly recently. People think, oh, I've got to pay taxes on it. You may not. I can't give you advice right now. You're not a client. But in some situations, maybe most situations, with this type of thing, you didn't do anything significant for it. You just used a platform and a service which you would use normally, and you received a reward for using the service. Does that not sound like Tesco's club card points to you? That's a cashback reward, is it not? You're using a service you would normally use, and then you didn't even know about it on top of all that, and you received X amount of assets with a value. I would say that that's a cashback, which is tax-free in the UK, and it's tax-free upon receipt. Okay, so what that means is if it's worth £100,000, it could be tax-free at that moment. Fantastic. Everyone's going, whoa, miscellaneous income. I've just sidestepped that. Yes. And what's the top rate of that? 45% tax. So on 100 grand, that's 45 grand I've potentially saved you. Now, if you were then to sell it for 120 grand because it goes up in value, The capital gain would be on the difference between the 100 and the 20, not the 120 full amount. Now, that very few people are aware of, and that is where you really save your money. So if you've got someone who goes, you pay 45% tax, not always. You got someone that goes, you pay capital gains tax from the whole lot. No, although that's a lesser tax bill, is actually more wrong. And then you got someone that says, actually, you get your base cost, which is the market value. No, it's not taxable, but you still use that to then calculate your gain later on. And people don't scream this from the rooftops enough, probably because it will likely get looked into and changed and all sorts, because it's very profitable. Not profitable, my apologies. It's very lucrative, shall we say. So that's option number one. Option number two is where you didn't do anything significant to receive said airdrop. Now, clicking a button, did you do something? Well, yeah, but it's not as much as if you were to do a survey, follow someone, tweet this, or whatever it might be. It's a proper action. If you just clicked it, I wouldn't say that counts necessarily. Now, what that means is the same situation as we just talked about. There's no tax upon receipt. You just capital gains tax upon disposal. Nice and easy. That's where these are the two situations you want to be. Where most people assume they are, which may not be true, is that you did something significant for it and you received the airdrop because of your conscious actions. When people say, I went airdrop hunting, to me, that's taxable straight away. You're purposely looking for it. You're taking action, specific action to get that. So that means in the same situation, 100,000 would be subject to income tax. And then when you dispose of it, it's again only the difference between the two subject to capital gains tax. So that's a very holistic overview of airdrops. One, is it even an airdrop? Two, did you do anything significant to receive it? And then three, make the determination on the market value at the point of receipt. Yeah, if you get that, you'll save yourself an absolute fortune. And if at the very least be very accurate with HMRC and their airdrops.
Wow, that was a gem, Jamie. Thank you. I think because most people look at airdrops and they look at adding liquidity onto a specific platform with a view because they know that they're going to get airdropped a token in return. And that's I've done something specifically to get it, and that's obviously taxable. They don't know the nuanced stuff that you've talked about.
Yeah, so that was a gray area because you can go, well, I was going to do this anyway. Maybe it's a cashback, but it's like, well, can you prove one way or the other? And it is certainly a gray area, definitely. But yeah, it's a difficult one.
Yeah, and you have specifically had clients come to you, haven't you, to do like who have presumed that they have to pay huge amounts of tax on airdrops, and you've actually saved them a significant amount.
Absolutely. I mean, there's situations where the clients have gone, yeah, I've actually paid, I'm looking to pay my my tax bill with this airdrop because I've earned X amount or whatever it might be. And I go, okay, well, what did you do for it? It went, well, I didn't know I was going to get it. I was like, well, how did you get it? It was like, well, I just did stuff I normally would. And one of those things created this airdrop and I had no idea about it. I didn't do anything. It just appeared. I was like, well, why are you paying taxes on it? Well, it's because airdrops are taxable. Well, not always. And this situation doesn't sound like it. Obviously, this conversation went on for a longer time and we ain't got to the crux of it. But yeah, saved him a small fortune appropriately. And I believe, yeah, loads of individuals would be in this situation.
Yeah, that's interesting.
Mind you, sorry, James, this also happened the other way around. They're going, I don't owe this, blah, blah, blah. I go, okay, what did you do? And the first thing they say is, I went airdrop hunting, I went taxable. So it works both ways, unfortunately.
I think after this video, we're going to have loads more of those who are going to say, no, I didn't do anything. Didn't do anything.
I mean, the truth is the truth at the end of the day, and yeah, there's right and wrong. There's right and wrong. But whatever you do is none of my business unless you're my client. And it is my business.
So let's move on to a trader or someone that is trading actively. When might, rather than a capital gains tax disposal versus a trader, as it were, it's quite hard to draw the line between income tax versus capital gains tax in that way. How do you see it?
So it's funny you mentioned that. So I've actually got an article that's currently under review. So hopefully by the time this is out, it might be on our website. And that talks about exactly this. I tweeted about this last week on my Twitter page. It is very important to make that distinction. Absolutely. So why? Well, if you come under the capital gains tax regime, which most people would for crypto, you would end up paying up to 20% tax. If it's income tax regime, it could be up to 45%, maybe even national insurance if you are considered to have a sole trade account. And I think you've covered this in another video yourself to a certain degree, haven't you?
Yeah.
Try not to repeat what you said where possible. So how do you get a distinction between the two? Initially, you need to know that it is highly unlikely for any individual to be considered a sole trader. Highly unlikely. HMRC said flat out. Now, I believe, personal opinion here, that the reason for that is you would be able to make use of those losses because most people lose out in these situations and be able to set that against other income because it's a sole trade and you can carry it back, all sorts. Whereas capital gains, ring fence to capital gains can only carry forward. So that's what I believe is the reason why it's very, very difficult to be in that situation. However, not entirely impossible. The usual candidates I see in that situation are bot traders and those that create an NFT project. I mean, if you think about that, take away the words NFT, take away crypto, you're creating something and selling it. That sounds like a business to me. So how do you determine this in the rare situations where it is a trade? Well, you use something called the badges of trade. Okay. Now, I know the ACCA, for example, they have a long time ago sent out some educational content pieces around the badges of trade and what it means and how it works. You can Google it right now, badges of trade, ACCA, and it'll give you a whole list. What it is a series of 9 questions to help determine if something you are doing is a trade or if it is not. And if it is not a trade, doesn't mean it's automatically capital gains, by the way. Depends what you're talking about here. In the crypto world, you're probably going to say, is it a trade or not? And if it's not, it's probably going to be capital gains in most situations. So you go through the questions, and if you're answering yes or no effectively, and if 5 or more are yes, then it's like, okay, you're probably going to be a trader, and therefore in the capital gains, in the income tax regime. If not, then you're probably not. And again, this is not a guarantee. It's a framework. It's outdated. It's not specific to crypto. But some of the questions on there, which I'm sure people want to know, are include how often you trade, like how many transactions do you have? Please note that this is 1 question out of 9. So you could have 1 million transactions or 5.3 million, as we mentioned earlier on. That is only one proportion, 1/9 of the question. And it doesn't matter if you have over the average, say you got 50,000 transactions or 50 million, it's still one answer. It's one yes. So that's one proportion of it. The other one is source of funds. So how did you fund this, whatever you're doing? Is it through savings, more than likely, or did you take a business loan? That would probably allude to the fact that you're more likely doing something or taking a yes for that particular box. And you go through these lists of 9 questions, which again, look it up by all means. Some of them are a bit weird, like did you do anything to change the asset? So if you think of it as in you bought some wood and some nails and a hammer, and a saw, you sawed it up, you made a chair, then you sold it. You're changing the wood into a product. You don't do that with crypto. You don't change something. Now, I suppose this is probably a breaking news type comment because I've never said this before. It's just come to mind now. With ordinals, you are changing if you are to inscribe something, you would be changing the effective use of that Satoshi, which is the lowest denominator of a Bitcoin, and adding value to it to then sell on. Now, that could be a tick box. You are changing the nature of the asset. Never said that before, but kind of makes sense. But in most other situations, that could happen. So again, you go through these 9 questions, yes, no, yes, no, yes, no, and then you make a determination on whether you are trading or not. You will find at least 2 or 3 of them are automatically no's just because of what the crypto assets are doing, which is probably where HMRC got the backing to say it's more than likely not going to be. I would always add an additional question, which is annoying because now it's 50-50. You got 10 questions. It could be a 50-50, but just to check, I would add an additional question to this for those in the crypto space. And the question would be, what is the level of sophistication that you are dealing with? Or rather, is it a higher level of sophistication than the average person? We're talking, again, bots, business plans. We're talking just where you elevate that thought process of what you are doing. So with me, like I'm buying meme coins, I'm buying, your blue chip coins, altcoins, whatever it might be. I don't really have a plan, if I'm honest, which is awful and probably why I've never made money in the crypto space because I'm not a good trader. but that's completely different to Joe Blogs, who's got an algorithm, some bots dealing with that algorithm, a business plan, a loan. It sounds a bit more tradey. So that's effectively how you distinguish between capital gains and trade within the crypto space. Again, highly unlikely. But at the same time, if you're sitting there going, oh, I could be trade because I'm trading a lot, probably not. If you're just doing the way everyone else does, just a lot, you tick one box.
That's really interesting. And you said you're writing an article. Where are you going to publish that? On Myna's website, Twitter?
Yeah, so it'll be on Myna's website. It will be on my personal Twitter. It will be on the Myna's Twitter. It will probably be on LinkedIn as well. We'll try and get it out everywhere. And the article will be called something along the lines of Are you a trader in crypto, or something like that. You'll see badges of trade on there. I've already written it on Twitter as I was sitting down with my twins. I've got 2.5-year-old twins, by the way, and they were just playing around, and I was like, oh, I should write about this. Let me put some ideas down. As I started putting ideas down, it started coming into some form of sort of format. I was like, I'm just going to tweet that and see what happens. So it's already out there with no checks or anything. But yeah, it will be around.
Perfect. Yeah, I'd really advise people checking that out. And linked with that,
Yeah.
derivatives,
Yeah.
because some people look at trading. You've given such a good answer there in terms of it being a business, and most people it doesn't apply to. There are quite a lot of people who are, especially on DeFi, you've got like MEXC and all of these big platforms that offer crypto derivatives, which according to the FCA shouldn't be available in the UK in that sense. Can you talk a little bit about the tax for them?
Yeah. So some people do come to me and say, Jamie, anonymously, I'm doing this. I know I shouldn't. Do I need to pay taxes on it? It's like, well, yeah, just because the FCA don't allow it doesn't mean you can also avoid tax. It's if you've done it, you've done it, whatever. Usually speaking, it's going to be under the capital gains regime. All you're doing is leverage trading or whatever it might be, margin trading. It's capital gains, not income tax, unless, of course, you fall foul of the badges of trade. I think I want to say Coinly. It's either Coinly or Recap, maybe both. They have a very nice and easy write-up, a couple of paragraphs about that, exactly derivatives and how it's taxed. So you're more than welcome to have a look at those as well. I'd encourage it if you got the question.
Yeah, that's brilliant. Thank you. And I know in future we're going to do more videos and we're going to unpick different things. And we spoke earlier, didn't we, about the fact that there's elections coming up in the UK. So let's see what happens there with crypto, potential Labour government coming in, and all of that kind of stuff. And even doing a video looking at specific crypto tax for businesses rather than for individuals. But is there anything you want to say about that, or is there anything you want to add to what we've talked about so far in the video?
I think it's hard to tell what's going on at the moment because I don't really see anything proposed, let alone really hammering down on what they want to change. I think they might be a change to the annual. Well, they said they wouldn't change the annual exemption specifically, but they might change the tax rates. Maybe they could do that. They could create a whole new regime for digital assets. That would be my personal favorite. Really, come up with specific legislation and guidance for that, which might be to our detriment. But at the moment, there's nothing really because everything's up in the air. I very much doubt they would focus on crypto either way, especially the Labour government. Again, I don't want to get too political, but we know from because we're part of Crypto UK, and we know from conversations there that Labour Party just don't really talk about crypto as much as the Conservatives at the moment. Doesn't necessarily mean they haven't got anything cooking, just don't know about it. So anything can happen. It would be great to catch up again once all this has happened and to see what's going on and give your viewers a lowdown on all that. We certainly will be publishing as much as possible. More than likely as a ad hoc tweet from me while I'm sitting at my desk going, this is happening, this is happening. But yeah, very interesting stuff really to see what's going to happen. In terms of adding anything else to what we've spoken about, I don't think so. It's fairly comprehensive. I'm so sorry to your viewers because I'm sure it's very boring at times. It's either too complicated or too basic or too much going on, but that's the genuine truth and the raw feel of what's going on with the crypto tax space and exactly why we've got this business, which takes its toll on all of us.
Yeah, no, honestly, I just wanted to say thank you because It has been comprehensive. I think you've covered the basics, but even gone into real depth with that and covered more specific stuff and covered stuff I didn't know. So a huge thank you, Jamie, for giving up your time.
My pleasure, genuinely, James. We're a big fan of your content. We cannot wait to see where this partnership goes, James, because we're going to do a few of these going forward, and yeah, very exciting times. Everything will change. Yeah, thank you so much for having me.
No, thank you. So that ends this particular video on UK crypto tax regulations, and hopefully that's helped. But do look out for the other 2 videos where I ask Jamie some more questions. It certainly is a bit of a minefield and quite stressful if you've made quite a lot of transactions over a period of time. So having someone there who's qualified, experienced, and knowledgeable in the field can save you a lot of time. And I'd like to just thank Jamie and Joe for giving up their time and sharing their expertise here. And if you are interested in getting specific crypto tax advice with Myna, then you can contact them directly using the link in the description to this video, which will take you to an online inquiry form. And you just need to add my name and YouTube channel in the referrer box, just so they know where you came from. And a great starting point is also Koinly, the automated crypto tax software that I did a video on in my channel also. And there's a link to sign up for a free Koinly account in the description to this video here also. If you have any other questions about crypto tax at all, please do add them in the comments to this video, and we'll do our best to answer them in another video in future. And if you are interested in more of a tailored approach to your crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.